In late 2025, Professor William Liebenberg points to a major structural upgrade coming to the XRP Ledger, native XRP Ledger loans. This is not another crypto app or side product. It is a protocol-level feature being built directly into the XRP Ledger itself, expanding how XRP can be used beyond simple payments or speculation. After this introduction, I'll refer to him simply as Profi. What makes this development important is that lending is moving into the core of the ledger. That means lending rules, repayment, and structure are enforced by the system itself, rather than by third-party platforms or experimental smart contracts. At its most basic level, XRP Ledger loans are formal credit agreements. XRP or XRPL native assets are borrowed and later repaid with interest. This mirrors traditional lending, but with every transaction and condition recorded directly on the ledger. Unlike existing crypto lending platforms that operate as separate DeFi applications, these loans are embedded into the XRP Ledger itself. Each loan is isolated, meaning one failed loan does not automatically affect others. This is native credit infrastructure, not a third-party workaround. The loan structure is designed to resemble real-world credit markets. Loans are expected to use fixed terms and fixed interest rates, similar to traditional banking products. This brings predictability instead of constantly changing yields. Each loan exists inside its own single-asset vault. If a borrower defaults, only that specific vault is affected. Combined with underwriting and risk assessment, this structure aims to contain risk rather than spread it across the system. In practical use, institutions may borrow XRP for liquidity or operational needs. At the same time, XRP holders can choose to supply XRP to lending vaults in order to earn interest over a fixed period. You would not apply through a traditional bank branch. Access would happen through XRPL-enabled wallets, web-based finance platforms, or institutional portals built on top of the ledger. The interface may feel familiar, but settlement happens directly on XRPL. In theory, any bank that integrates with the XRP Ledger's native lending protocol can participate. A bank like ABSA in South Africa could technically offer XRP-based lending products using this infrastructure. However, real-world access depends on regulation. Banks must still follow local credit laws, compliance rules, and internal risk policies. The protocol enables lending, but it does not bypass national banking regulations. It is important not to confuse lending with staking. Lending means loaning your XRP to borrowers in exchange for interest. Staking, if or when available, involves locking XRP to support network operations or earn protocol-based rewards. These mechanisms serve different purposes and generally do not overlap. You usually cannot stake and lend the same XRP at the same time. Holders will need to decide how they want their XRP to be used. For XRP holders, this introduces a new layer of utility. Instead of holding XRP passively, holders may be able to generate yield through lending. Fixed terms and fixed rates may offer more predictable outcomes. This also shifts XRP toward productive capital. On-ledger transparency reduces counterparty risk, while broader adoption increases liquidity and real-world usage rather than reliance on speculation alone. This is not guaranteed wealth, and it is not risk-free. Lending always involves risk, and participation may be limited by regulation, platform availability, or eligibility requirements. What matters is the direction. Developer signals and multiple reports suggest that native XRP Ledger lending is approaching launch, expanding XRP's role beyond transfers into structured credit markets. XRP Ledger loans represent a shift from transactional use toward financial infrastructure. Credit, yield, and settlement begin to exist directly on the ledger rather than through intermediaries. If adopted by institutions, including banks in South Africa, this could help bridge traditional finance with blockchain-native systems, giving XRP a clearer role in everyday financial life. If this explanation helped you understand how XRP's role is evolving, consider liking and sharing this video so others can learn as well. It helps educational content like this reach more people. And I'd like to ask you one question. Do you see XRP lending as a realistic next step for mainstream finance, or do you think adoption will take longer? Share your thoughts in the comments.